It's really just one situation out of many kind of hot trade situations throughout the world: Korea, NAFTA, Europe, and the strategy working in one place isn't necessarily going to work in another place. I think the issue with regards to how the U.S. and China are relating to one another is that there's a much bigger fundamental impasse. They fundamentally view what's a fair trade relationship differently. And until that's resolved and one side capitulates to the other, there's plenty of room and scope for escalation. So the $200 billion products that are being tariffed that just went into place, we think is just kind of the middle stages of this. We think we're going to get all the way to the U.S. tariffing all of China imports and China counter-tariffing all of their U.S. imports. And we think eventually that's going to exert a decent amount of pressure on the market come 2019 when it starts filtering through the earnings, filtering through the supply chains costs, filtering through the consumer behavior.
John, is that in the market at all, the escalation that Mike just described? And if not, what do you do if that is a risk?
It is in the market, but not completely in the market. And what we would at USAA would say is that what the administration needs to be cognizant of is the fact that China is very, very important in the global supply chain, particularly for technology. And the trade negotiations create a lot of uncertainty. There's risk to sales, there's risk to cost, but we've gone to a globalized world where supply chains are global, and we don't really know what happens when you get the so-called free and fair trade, and you have to unwind some of those supply chains. What's the ultimate impact on the economy, global economy, and companies? But it's certainly, from an investor standpoint, going to make them nervous because it's going to create uncertainty.
Mike, on the flip side, I mean, what the South Korean renegotiations showed us is that, I mean, they said that there were a lot of significant changes, but this was all negotiated in a matter of months. It came together very quickly. Can investors not look at that as a template, at least for NAFTA, especially those trade negotiations with Canada, which are also already in place and need a little tweaking?
Yeah, I mean, it's similar in the sense that you're negotiating with an ally, and so there's more at stake than just an economic relationship. And we happen to think that the NAFTA negotiations aren't going to lead to NAFTA breaking up, and so I think that's good news on the margin. But the point on supply chains, I think, is exactly the right one here, which is to say that even if the U.S. is just focusing on China, and in some ways not having a problem with Korea, not having a problem with NAFTA, being kind of on delay with trade tensions with Europe, allows the U.S. to sort of more forcefully, aggressively pursue its trade strategy with China. And a lot of these tariffs haven't really kicked in yet, and when they start kicking in, we're really going to see the full force of them. A lot of these trade impacts on supply chains and consumer prices, they've been hypothetical up until now. Even in these disputes with other countries, China's going to be a real live exercise in all of this.